confirm everything is working. Okay, perfect. Okay, let's get started. Alright, welcome to the new weekly outlook. We are going to go over some of the macro fundamentals that have happened, last week, over the weekend, and what are we looking at going into the new week. So let's go over everything that's going to be impacting gold, silver, oil, equities, and currencies. Starting off with the biggest development that we're expecting that it's going to move the market significantly, is the Iran deal. So the past couple of weeks, we had the typical Trump said final stages headline that fooled a lot of the market. We had this ping pong effect that was going on where they would say that we're getting closer to a deal, there's some more optimism, and then we get right back to both sides saying that we're ready for any sort of military action. But now it seems like we have a lot of confirmed sources where, if we go all the way down in this article, we have confirmations that we're moving towards a 60-day extension of the existing ceasefire. We're expecting to get a potential deal tomorrow, closer to Monday. And we have a lot of other news sources like Financial Times and CBS News simultaneously saying that U.S. and Iran are close to signing a deal of understanding with the following specific terms. A 60-day ceasefire extension, and during those 60 days, the Strait of Hormuz would reopen with no tolls, and Iran would agree to clear the mines it deployed in the strait. In exchange for that, the U.S. would lift its blockade on the Iranian ports and issue some sanction waivers to allow Iran to sell oil freely. The deal also includes Iran making commitments to never pursue nuclear weapons and agreeing to negotiate a suspension of its uranium enrichment program during the 60-day period. So not to deliver on that suspension immediately, but to basically negotiate it. Trump also has posted on his social media platforms here that the deal has been largely negotiated, and he said that his call with the prime ministers also went well. The Iranian Foreign Ministry spokesman also confirmed that Tehran is in the final stages of drafting the MOU. He said that, I want to quote him directly, that within a reasonable period of 30 to 60 days, the details of those points will be discussed and a final agreement will ultimately be concluded. So we're getting some more of that optimism now, closer to this potential deal. Let's continue back. There are some key sticky points for this deal, so they're going to continue moving towards potential negotiation. We have the Strait of Hormuz, we just talked about that, they're going to reopen that. The nuclear weapon or the nuclear program as well. And then the Lebanon conflict, and let's continue down the sanctions, and that's pretty much it. So all of these are going to be now actually negotiated. They're moving closer to potential deal, which we're hoping we're going to end up getting by tomorrow. Tomorrow is a Memorial Day weekend in the U.S., so the U.S. market will be closed. But in terms of data points, let's come back to Forex Factory. Last week we had, let me do this. Last week we had a lot of data points coming out. We had, let's continue down here. We had the FOMC meeting minutes come out, which showed that the Fed, or a lot of people at the Fed, are now voting to remove any sort of language around any rate cuts. And going into the June meeting, we're going to see that completely being removed from the policy statement. June is also going to be very important because that's going to be the first Fed meeting of Kevin Warsh. He just got sworn in as the new Fed official on Friday. And so we're expecting that right now we're going to hold on to those interest rates, and going into potentially end of the year, if we actually don't end up getting a deal with Iran, then we are going to see those potential rate hikes. The market's already pricing that in with a 40% prediction that we're going to end up getting those rate hikes. We also had, on Friday, we had the consumer sentiment coming out, which has dropped for the US from that 48.2. That was a previous. We were forecasting the same exact number, but we actually ended up getting a lot lower than that. We also had a higher inflation expectations here. So all this basically is pointing towards that continuation sentiment of stagflation. From the CPI data, the PPI data, and then if we actually come over to PMI data on Thursday as well, that showed us, let's continue down here, that the manufacturing side is, it shows us a bit more of an optimistic number, but we know that that's from the war-driven stockpiling, not actual consumer demand or retail side demand or economic demand. The services PMI is sitting right above the 50 mark. That 50 mark is, anything above that is in industry expansion, anything below that is contraction. But we're forecasting that we might get a little bit of an increase, but obviously we didn't get that. So overall, the economic picture is the same, that it's a clear stagflation situation that we're sitting in at the moment. Coming into this new week, tomorrow, bank holiday in the US, so we're not really expecting that there's going to be a ton of volume in New York session, driven by any sort of US news in terms of economic data points. But we are still watching the headline. So if we end up actually getting any sort of headline development on, we have now moved closer to a deal, or there's an actual deal that's happening or anything like that, then when the market opens up, there's always going to be some reactions throughout the Asian session and London session. Then going into Tuesday, we have consumer confidence coming out 30 minutes after the New York Stock Exchange open. If you're trading the Asian session, you have a ton of red folders coming out. If you're trading the Australian dollar, then you have CPI data coming out. And then if you're trading the New Zealand dollar, then you have the interest rates that will be coming out. Then going into Wednesday, quite an easy day, but still we're looking at, hopefully by Monday or Tuesday, we would have any sort of headline development around that potential deal. But if we don't end up getting that, then Trump did say last week that he's going to give Iran until Tuesday, early next week is what he said, but like that was Monday or Tuesday, to get a potential deal. If not, he was going to continue with the military actions. And we have learned by this point, just following what has been happening with these headlines in the last couple of weeks, that Trump will easily go back to military actions and using his military force. Now, let's continue down onto Thursday. We have prelim GDP coming out and core PCE price index. By this point, we know that we're going to be expecting higher numbers in the forecast. We're expecting inflation to increase here. Prelim GDP, we're expecting from a 0.7 that we're going to come up to a 2.1% rate, but it's going to be a surprise. The market is pretty much expecting that's going to come out lower, but it's going to be a surprise if it actually ends up being 2% or higher than that. Unemployment claims, we're expecting a bit of an increase. We already had that in the past week, where we had about 2 weeks ago an increase from that, almost 200K. We're expecting 205, we ended up getting 211, and then last week we're pretty much right in the middle of this forecast in the previous range. Going into Friday, we have Governor Bailey, who will be talking, and London session, and then we end off quite easy for the week. Any questions on the fundamentals? All good? All right. Now let's come over to the technical side. So looking at US 30, equities have across the board hit their new all-time high levels. We still need to be careful here. This was coming in from a lot of the optimism when we were closing out on Friday. But we need to be careful here because any headline that is going to come out regarding the peace deal will be moving this in a very volatile manner. Now looking at the weekly time frame for US 30, we're going to map out the topic rejection, which is at 50,800. And then we have the previous resistance that we're going to map out as our current support. Do expect that when the market opens up, there are going to be gaps that will be happening as the market starts to price in these headlines. And then on Friday, we closed out with a nice topic rejection into that 50,800. No bottom wick whatsoever. That was a continuation of that optimism from the Asian session. the day prior, come down onto the 4-hour time frame, and then we have this hard rejection that happened at that 50,800. So if price continues to push back down bearish, then we're looking for those continued sells. The expectation here is that typical behavior of price action like this, especially in an environment like the current one, where you have so many fundamentals are coming out, headlines like these that are impacting the markets, and the market just pricing in any sort of optimism, because all that plays obviously a huge role into the domestic economy for the US. And then also with the G7 meetings, all of the economies and the finance ministers from the G7 meetings have said that the current war and the closure of the Strait of Hormuz is impacting all their economies terribly. They're all facing inflation issues, and a lot of them are not able to control the inflation, and they're not able to deal with their inflation issues at the moment either. A lot of them are sitting in the same boat. They can't do rate hikes just yet, and they can't do rate cuts, continue with the rate cuts or anything like that. So we're sitting in a very sticky situation where the market is continuously trying to price in any sort of surprises in the market. But as it pushed up with this bullish momentum, that optimism into that 50,800, and then it pulled back down, it is going to be seeking liquidity areas. It's going to be seeking those safe zones until we get actual developments on whether we are going to end up getting a deal or not going into tomorrow and even Tuesday. So for that reason, if there's any sort of gaps, we want to be careful of that. We're not going to be trading, don't look for sells immediately. If there is a gap down, you're going to wait for that gap fill. You're going to wait for price to give you retracements. You want to be a little bit more conservative when it comes to your overall risk management here. So be very careful for this week. Maximum that we're looking for is, again, 1 to 2 trades for the day, and just 1 to 2% risk per trade, given the binary event risk that we're looking at the moment. When that happens, understand that when price breaks below that 50,200, for the longest time, 50,000 area has been considered the buy side liquidity area. So if price does break below it, we're coming right back down into that 40,000 around 900 to come down into almost 40,300 area. Price can dip back down further here, continue creating those higher low formations, and then continue pushing back up bullish if it has that continued bullish momentum, or that bullish the positive optimism here to continue pushing back up. Now we come down to the hourly, same exact thing. We have a little bit of consolidation. So the cleaner sells that we're going to be looking for when the market opens up, we're going into London session, it's going to be at the break of this hourly support, and then a continuation down into that 50,200. Once that is broken, that's when your weekly range extends out to the bottom or the candle open of this previous weekly candle, which is at 49,000 almost 300 area. So that becomes our full range for the week, given that we know market is going to be super volatile. Looking at NASDAQ, we have tapped into those all-time high levels, which is 29,700. We have our bottom wick rejection from last week. We're still going to map that out. That becomes our entire range. Now coming over to the daily time frame, same exact thing as US 30, no bottom wick rejection on Friday's candle, but we had a nice top wick rejection tapping into the previous highs here at 29,700. Drop down to the 4-hour time frame. We see a similar setup of price rejecting right into that 29,600, holding onto a resistance. So here, when the market opens up and we're looking for those continued sells, we want price to break below its own 4-hour lows. I'm actually going to extend that down here a little bit more, which is that previous resistance, break and retest support, a little bit of support, and above that, we just have this kind of a consolidation that's going on. So if price breaks below that, it's clean sells coming down into almost 29,100 area, or even continuation down into 29 flat. And then if price continues dropping, like I said, it's going to be seeking liquidity. It's going to be seeking any sort of momentum areas, safe zones, before it gets those headline developments. So then after the headline developments do come out, whether it's going to be, yeah, we have a deal, or no, we don't have a deal, and we're going to continue on with the attacks, you are going to see more volatility and volume in the market. So when that happens, obviously price needs to tap into those liquidity areas. It can't move without it. So then we're going to see a continuation down into the support of 28, almost 800 area, if and only if 29,100 is cleared and price continues pushing down. If not, there's a very high chance that price continues to create those higher highs and higher low formations. come over to GBP USD now. Start on the monthly for this. The bigger picture here for GBP USD is still that it is sitting in this monthly consolidation area of, really the consolidation starts up there, but we're going to map out the current monthly high at 1.36 and the support area right here. So that's your core consolidation price is still sitting in terms of the monthly time frame. We are going to adjust this as we drop down to lower time frames, but I want you guys to see what the bigger picture is here and the reason why the current levels that we're sitting at are so important. The reason why you can't look for swing trade opportunities here until these higher time frames are broken. But once that level is broken, then you will see massive volume in either direction. Another thing of why this is so important from a purely technical perspective is you've had massive rejection here back in 2009, and then we had a clean push back up bullish, and that entire move was for about 2,500 pips. And then after that, once we broke below this entire zone, so as you can see, once it did come back into this area here in 2016, for about 1, 2, 3 months, we had very little volume trying to find our direction, and then finally when it did drop, we had another drop for about 1,300 pips. Once again, when we came back into this area, you kind of had that break and retest for about 1, 2, 3, 4 monthly candles before we finally pushed back up bullish, and that was a push for about 868 pips. So as you can see, anytime price comes into this area, there's a lot of volume, and that's the type of movement that we want to catch as well. So we don't want to just kind of cowboy this move here and start looking for swing trade opportunities when there's no opportunity here at all. What you want to look for instead is any scalping or day trade opportunity. So what we're going to do now is adjust this to the previous weekly candle open, which is our current range. Like I said, when the market opens up, very high chance of any gaps. So that's one thing that we want to be careful of. But as of right now, this is our range. And once price does open up, when the market opens up in just a couple of hours, our range becomes a little bit wider depending on which side price breaks out on. Drop down to the daily time frame, you start to see a little bit more consolidation here. For any swing trade opportunities, I want price to break below this daily support and then continue pushing back down bearish. You have a scalp that can be turned into a day trade, potentially into a swing trade, depending on how long it takes for price to play out this entire move. You have about 72 pips to the downside. If price continues pushing back up bullish, we have these clean moves coming up into this previous resistance for about 90 pips, and then a continuation up for about 164 pips or so, coming back into this daily consolidation area. When I see that the daily is consolidating, I know that the lower time frames are going to be messy. So when I drop down to the 4-hour time frame, I still see that bullish momentum where price is continuing to create those higher highs with these wicks right here, tapping into the same exact equal highs here from the left. And I see that price continues to hold onto those higher low formations. So that would confirm, if price continues to break below this zone, it's going to confirm that it's breaking this short-term bullish structure, and it's going to continue pushing back down bearish. So that is going to be right in line with my higher time frame structures, especially on the daily time frame, where I see that price is consolidating, is starting to push back down. So this breaking below this zone is going to be a confirmation that this is going to be a lower high formation, and I can look for that continued sell to the downside. If I drop down to the 1-hour time frame, I see a ton of consolidation here. So if I'm scalping, then I'm waiting for price to break below this hourly support here to continue pushing down for about 20 pips or even about 30 pips. But understand that this could very likely just be the limitation of your trade, given that tomorrow is a Memorial Day holiday in the US. So really you're just going to be trading off of London's volume. Now going over to Euro USD. We have, let's actually go back up to the monthly for this one too. Let's study what happened here. Very similar price action to GBP USD, where you have this monthly consolidation that's forming right in between these areas here. And then if you look to the left, you've had a massive rejection here back in 2005, and then a nice bullish run up. Same thing, a wick rejection here, nice bullish run up. We came pretty close to that support area here again, and then a nice bullish run up. When price did try to break below it, it sat in consolidation for multiple years. but this entire move down was for almost 1,000 pips. So from about 2015 until finally being able to break above that in 2017, we just sat in consolidation in this entire area. And then after price did break above it, you had this break and retest formation. It did continue back up for about almost 700 pips. When it came back down, same thing, a drop down for about 800 pips. So the point being is that whenever price does break out of this area, there's going to be a ton of volume. So that's what we're being patient for when it comes to any swing trade opportunities. If we look at the weekly time frame, just going to adjust these levels here. That last weekly candle did not have a ton of volume, right? The week before that, we had a nice topic rejection right into the weekly resistance area here to the left, and then a continuation down, close pretty strong bearish, and then last week we didn't have a lot of volume here. So as of right now, that 1.158 is our weekly support, and this is our range until price opens up and it moves in either direction. When it does move, some of the areas that we are going to be targeting is going to be, first of all, this support area here, and then a continuation down into the next support down here. Based off the weekly time frame, you're looking at about 100 pips and then continuation down for about 163 pips. If we see that price is pushing back up bullish, which usually is what happens when we get some positive news with the US and Iran war development, we see that the US dollar starts to get a little bit weaker, we get a little bit more relief, and then we start to see that whatever other asset that it's paired with, especially like with gold, GBP, euro, all that, it tends to get a little bit more bullish push back up. So if that happens, then you're still looking for about 125 pip range on the other side. So anything in between is going to be more like scalps, day trades, those kind of things. Anything outside of that range is going to be your swing trade opportunity. Come down onto the daily time frame. I'm going to remove these just to make sure that no one's getting confused. But sitting right in the middle of this range here onto the daily time frame, we are sitting in this pure consolidation. So that is the area that we want to watch out for. If price maintains above this zone here, we're looking for those scalp buy opportunities or even day trade opportunities. But if price breaks below that, then you have sells coming back down into the support zone for about 21 pips or so. If price reverses, it holds on to a support here and continues to break the previous highs. Then we're looking for buys for about 16 pips and then the entire range for about 40 pips. Let's come over to JPY. Same thing, look at the monthly, and it is tapping into the same exact highs from that 2008 crash. And that is your 214 area. So that's the high that we're sitting at right now, even this month. Drop down to the weekly, and that's exactly where we have tapped into and rejected for about 3 weeks in a row now. So that is still our resistance. And then we have the candle formation from last week, sitting at 211.4, the entire range being about 262 pips. If price continues to break above that, let's say the market opens up, there's any sort of gaps or anything like that, and price continues to push back up bullish, then based off the weekly time frame, you have this entire range of about 160 pips. The way that that move is going to happen is if we have continued optimism from that headline. If any parties come out and they say that we're not having a deal and, you know, we're not moving close to even having a deal, we're going to move closer to any sort of military escalation, then you're going to see that this continues to drop back down into the range. Come over to the daily time frame. You have been sitting in this massive consolidation since last week of April up until now, so for almost a month. So if we're going to look for any sell opportunities here, I want price to break below this 213 area here almost, and then continue pushing back down for about 162 pips. First target is going to be coming down for about 75 pips, and then continuation down after that. Nothing in between here unless you're looking for just pure scalps, no swing trades or anything like that. But even for pure scalps, drop down to the 1 hour time frame, wait for price to break below its own hourly low, and then continue pushing down for about 32 pips, and then this entire range is about 60 pips here. For any buys, clear a break and retest above 214 and then take it back up into almost 214.2 and then a continuation up into 214.4. Let's take a look at USDJPY. Not much has changed here in terms of the previous weekly outlooks and market updates that we have been doing. You still have your 159.3 area. You still have your 158.6 from the monthly, from the weekly as well. Same exact range from the last weekly candle. Drop down to the daily. One key thing here is that during the G7 meetings, the finance minister from Japan did say that whenever JPY starts pushing closer to the 160 area in the current market conditions, then there is potential for another intervention that's going to happen. And it got backed, that statement got backed by the other G7 ministers as well. So as we're getting closer to that 159.5 or 160 area, we want to be extra careful because there is higher risk of that intervention, and now it's backed by other international economies as well. So for this pair, I'm just watching it. I'm completely just staying away from it. I would not be trading this. There's other better opportunities in the market. Now looking at gold, I'm expecting that there's going to be a bit more of a relief. I'm expecting that gold is potentially going to be gapping right when the market opens up. So looking at the monthly time frame, about 2 months ago, or in March actually, we had a massive bearish pressure to the downside, and then we had a wick rejection, came back up and closed closer to that 46.70 area almost. And then after that, the next 2 months, we haven't had enough volume to continue in one direction or another. That's kind of because of that ping pong effect that has been going on with the fundamentals, where you get a bit more of a relief from the dollar, and then right after that you get headlines that they're continuing with military escalation and things like that, and then you start to see that the dollar starts to become a lot stronger compared to any other assets that it's paired with. Based off the weekly time frame, we're still sitting into the same exact support of 44.56.7. You've got your top wick rejection, 45.89.7 or 45.90, any of that. Drop down to the daily time frame and you start to see consolidation right down here. We've had consolidation right into the support that it keeps tapping into, and then a nice bullish run up. We came back and consolidated into that area once again, just to come back up into the same exact previous highs. And now, even though we are creating lower low formations and lower high formations, we're consolidating here once again. So I am expecting that whenever the market does open up, it is going to gap. So to prepare for that in either direction, if we're going to look for buys, you want buys above that 4-hour high, or you want sells below this area. If we see those sells, then I want to see drop down to the 1-hour time frame. I want to see price giving me a break and retest formation of some sort, or if there's a gap, for example, then I want it clearing below this wick rejection and then continue down. When that happens, at the bare minimum, I'm looking for a move to come back down into 44.72.5 area, and then a continuation down into that support of 44.60. If price gaps back up bullish, that's going to be a massive gap here. But if it does gap up, then the only ways I'm going to entertain any sort of buys here is going to be above that 45.30 zone, and then a continuation back up, coming into 45.50, and then back into 45.60 area or so. So these are just the ranges for when the market opens up, but whenever the market opens up and you see those actual price movements, then you're going to extend your resistance there, and your support remains the same unless price is gapping down even further. I expect that gold is going to be gapping up when the market opens up, because we're seeing some more relief from the US dollar after this peace deal headline that just came out. Now looking at silver, we have our bottom wick rejection from last week, 73.2, top wick rejection or closer to that resistance right there, 79.34, drop down to the daily. Now coming on to the daily time frame, we see that price is pretty much sitting right in the middle of the range here. I want to see price breaking above its own daily resistance here to continue pushing back up into closer to that 80 range to look for any buy opportunities, or sells continue as price breaks the previous daily low. Which means that on the 4-hour time frame, it needs to break below this support and continue pushing back down bearish. So break below the support, clear that wick rejection here on the 4-hour time frame, and then continue pushing back down closer to that $74 mark. When you come onto the 1-hour time frame, you can even extend this further down a bit more. So that way, price is completely clearing out of this before you start looking for those sells to the downside. Let's come over to oil. So with oil on the weekly time frame, or actually let's come over to monthly. we see that price has tapped all the way back up into almost that 120, even 117 area. And then this month we came back up and rejected almost closer to that 107 area. Drop down to the weekly time frame, you start to see a lot more of this consolidation. But last week we just played between this $95 mark and this 105 area. Let's drop down to the daily. Based off of these headlines, we had news that, or in these articles, that we're going to get that 60-day extension, and during that the strait would be reopened and Iran will be allowed to sell its oil. I'm expecting that oil is going to gap down even further below that $90 mark this week based off of those headlines, especially when the market opens up. So because of that, I'm going to expect, let's extend this down a little bit more into that $94 mark. I'm going to expect that oil gaps down a bit more, gives us something like this, and then continues pushing down closer to that high 80s number, come back down into this next support. If the headlines continue, Trump says, or Iran says, we're going to continue on with the war, we're not having a deal, whatever happens, basically it falls through, oil shoots right back up above that $100 mark. So I'm definitely expecting that there's going to be gaps happening on oil and gold for sure. Now dropping down to the 4-hour time frame, let's say, just in case we don't get massive reactions to the market, which is going to be very unlikely given how the market has been super reactive to any sort of headline developments. But if price breaks back up above that $100 mark, then we're looking for those easy buys coming back up into 102 or even 105 area. If we see a gap down happening, then we're looking for, first of all, price to come back and tap into 94, and then a continuation down into the 90 area or even $88 area. But understand that gaps are going to be filled. So at least a 50% gap fill is your bare minimum trade. The easiest trades that you can take in the market is going to be those gaps. So I'm expecting a move, something similar to this, where there's going to be a gap down. You see that continuation, and then right when London session opens up, or London or early New York, then you're going to see that continuation back up bullish. So that's pretty much it for the weekly outlook. The most important thing that's going to save your account for this week is going to be your risk management. So make sure that you guys are only risking 1 to 2% risk per trade, given the high risk environment that we're sitting in at the moment. We are expecting that we're going to end up getting a deal announcement before Tuesday's open. So if that happens, we're not trying to hold out any sort of swing trades going into Tuesday. Wednesday is going to be, let's continue down, or Thursday, it's going to be the core PCE price index. That's going to be another high volatility event for the market. So please just make sure that you guys are trading safe. You're not over risking, you're not over trading. And I will see you guys